Ladies and gentlemen, Kim here, and welcome to the weekly update. Hope you guys had a good day trading today. Keep in mind, I am recording this intraday, so as I record this video, market should be open for another 2 hours or so, but we're gonna be looking at big picture, so it doesn't matter how the market is gonna close today. So as I record this video, S&P seems like pretty much flat, but S&P is up 25% year to date. Nasdaq close to 30% there. Dow 17, semiconductor with 42% year-to-date performance after a monster year last year. Small caps about 20 there. And a lot of these guys did good, like banks up a lot, energy. You can see the laggers here, biotech lagging. Healthcare is okay, 70% or 17%. Home builders really making a big move. Retail, 61%. Emerging market is negative there. So you can see grayscale Bitcoin is about 45%. Gold, silver, miners are the laggers there, along with like dollar. Oil's up 70% year to date. Treasury bond obviously down, along with the VIX there. So, in these weekly update analysis videos that I'm gonna be doing every Friday, right? And we'll continue with the weekly videos probably all the way until maybe January or February or so. Right, so on the daily update videos that I do Monday through Thursday, we look at 65-minute chart, right? And then we analyze in the each day price action, forecasting what might be coming next day. In these weekly update videos, we're gonna be looking at daily chart. Daily chart meaning that each candle you see. So I'm actually going all the way back to 2020 March lows. That's the 2020 March lows. Right, when we saw that COVID shenanigan, right? That's the end of March, and this is today. And we're gonna look at the big picture, the primary term, the long-term trend of things, right? So these videos, I don't have to wait until the day is over to analyze them because I'm looking at the big picture. And so in these videos, what I'm gonna do is we're gonna look at, we're gonna look at Spider today. We'll look at Qs, which is a Nasdaq. We'll look at gold. Gold has been lagging heavily, down 2% year to date this entire day. Maybe there are certain good signals that gold is bottoming for next year. Bitcoin is up 45%. We're also going to talk about grayscale Bitcoin there. So let's start with the Spider here real quick. So going all the way to the March lows here. Now we all know that what a tremendous opportunity that was. I mean, all kinds of shenanigans, all hell was breaking loose. You guys remember the great Ray Dalio came out and said publicly somewhere here in early April that the Great Depression is coming. Well, complete opposite has happened, because you know what, this move right here, this reversal right here is gonna go down in history as the biggest and fastest, baddest V-shaped reversal known to man. Like never, since the inception of stock market, we've never seen stock market coming down 35% and then V-shapes up in this fashion. It has never happened. Never. To put things in perspective, 1987 Black Monday, we did see similar 35% correction. Do you know how long it took after that 35% correction after the 1987 Black Monday? Do you know how long it took for the S&P 500 go back to breaking even? Year and a half. 1 year and a half. Do you know how long it took the S&P 500 to come from here to there? Let's figure it out together. Late March, September, right? So late March and September, how many months is that? 5 months. Keep in mind, Nasdaq did it in 4 months. 4 freaking months. 4 months. We saw 35% correction. Market got right back up in 4 months. Again, to contrast that, 1987 Black Monday, 35% correction on the S&P. It took, you know what? Let's say in months. It took like 16 months. 16 months to get back to the all-time high level. 2020, we did that in 4 to 5 months, right? So it's going to go down in history as the fastest, baddest V-shaped reversal ever occurred in the stock market. And after that, I mean, things are a bit hectic here with the, Trump, running, fighting to defend his office against Biden. That was right here. You see a little bit of jittery action right there. A lot of people are saying that, if Trump lose this race, there's going to be a big crash that's going to come. Some are saying that doesn't matter who wins, or if Biden wins, right? If Biden wins, things are going to get really, really bad. We're going to go back to the lows and revisit the March lows. Well, then never. This is the reason why you want to continue to, we have to understand the big picture, right? You can't be so saturated and caught up in the moment, the heated moment and the emotions, the fear and shenanigans and all these stuff that these, mainstream media are trying to push. And keep in mind, mainstream media, what they do on TV is so that you can keep tuning back on. They don't care about your investment objectives. They don't care about, how you perform. What they care is that keep imputing fear into the public so that you will keep continuing to turn to their channels, right? So I highly suggest that you do not participate in these mainstream media shenanigan shows that they provide. I'll call them BS shows because it's all BS that they put together. But anyhow, so we're up here. I mean, just can you imagine? Spider was trading at 220, 218 at its lowest, 218 or so. It's 470 today. In about a year and a half later, it's the craziest thing ever, and we're becoming part of this history that we're probably not going to see anything like this for the next 30, 40 years. We're not going to see anything similar to this ever on the S&P 500, right? So that's what happened right here. That was that, that certainty, uncertainty, jittery, a little bit of anxiousness, right? That's all happened here. And then that is interesting because despite the fact that what everybody was saying, that if Biden wins, that this market is going to tank, well, we actually got back up. And then we keep going up here. This is why we got to learn to respect the trend. We got to know how to look at the momentum, right? We got to understand the big picture sentiment of things so that you don't get caught up in this. Day to day, man, market is going to fluctuate every single day, right? I mean, think about where S&P was, where Spider was just a year and a half ago, where we're at today. Some will be thinking, you can't even believe this. I can't, you probably thinking, I cannot believe this number. 470, just a couple days ago, we're 220, we're 470. How can this be, right? This is why it's imperative you understand the big picture. We're talking macro, we're talking secular, we're talking primary, we're talking long term. And this is why I want to put these weekly update videos for you guys every single week on Fridays, at least for the next couple months or so, to equip you guys. Because market has seen some phenomenal run. Can't we all agree? From here to there. But what people are saying is, can this market continue to go higher? Where is the top? Wrong question. Because if people are looking for the top here, people said it's up too much here. That didn't play out. People said here, that's the ultimate mother of all trend, making new all-time highs. Got back up. People said right here, nope, that's nope. Can't go any higher, can't go any higher, can't go any higher, can't go any higher, can't go any higher. That's the top, that's the top, that's the top, that's the top. And here we are. Let me be frank with you guys. Nobody knows. I mean, no one. No, I don't care if Warren Buffett himself, right? We already know Ray Dalio can't call anything, or any other people out there, you know what I'm saying, on TV, trying to call things. We know that they're always wrong. So nobody knows, right? Nobody knows where the market where the top is. That is the hardest thing. So what's the best approach when it comes to stock market, when it comes to this market? Well, first of all, I understand that if you missed out this entire move, it is extremely difficult. It is extremely difficult to find any long positions, to find any kind of long setups. I get that. Like, are you freaking gonna go long right here? No, right? And people been saying this entire, are you crazy to go long here, 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 here? Look what happened. It was trading at 360s, man. Now it's 470. So if you did go long, even here, when there's a little bit of fluctuations that happen during the race, presidential race, right here, if you did buy it, because it was trading around 300. Spider was trading around 300. It's 470 right now. Even though so many people said it's up too much. And I want you to think about that. See, most people, right? Most people don't know what they're talking about. Most people, they let that fear get into them. Because they missed out the absolute low, which most people did, that they wouldn't feel comfortable going long until this thing goes back down to revisit the lows. So it's all relative. What you think is a good place to go long, it's all relative. People are saying that, are you crazy? You want to go long in the market here? Are you freaking crazy where COVID is ramping? There's no economy. They're shutting us down. There are no businesses operating right now, right? The unemployment rate highest since the Great Depression. Are you stupid that you're going to go long here? This is a crazy level to go long. What is people saying now? Are you crazy that you're going to go long here after market has made up all this move to the upside? It's always the same. Doesn't matter here or there, where. It doesn't matter here, 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 here. It doesn't matter where. It's always same BS people always talk about with their insecurities in the market. You must learn, right, to see things. And this is what these analyses can help. So that you don't want to listen, you don't want other people to influence in that way, right? Being all fearful. Because I'm thinking about it. Because you listen to some bozo saying that the Great Depression is coming, you missed out this entire move. Because somebody told you that Great Depression is coming, just because they thought it was, not understanding the macro sense of things. And we talked about, you guys remember this right here? I wrote a blog about this, I'm sure. Some of these levels at twotradersclub.com, and this is what we call rising pivot. And you guys know about rising pivots, don't you? I mean, if you've been watching my daily update videos, I do this all the time with my 65-minute chart. Well, that same principle, that same application applies here in the daily chart. And much of a bigger picture, obviously, this is a big picture pivot, right? This is a big picture. We're going all the way back to 2020s here. So this pivot going all the way from early 2020 to, it's about a year worth of that pivot. Same thing here, going all the way back to, February 2021, and then that's about 8 months or so. But it's been playing out almost perfectly to the T, as you can see right here, right? Prior resistance acting as new support. When the market, especially S&P 500, when the market respects these levels precisely, in a precise manner like this, you know this market is strong. Because usually when there's a shenanigan, when there's a lot of unforeseen, activities, craziness, right? What's going to happen is the market is going to completely ignore these pivots and supports and levels because the market is crazy. I mean, just when the market started not respecting the level, that's when you know this market now going into a psycho mode, right? Not only we got the rising pivot playing out, look at this. You see this moving average right here? Do you see this right here? That's what I call, that's my long-term moving average. See right here? Do you see this? That thick, kind of light blue. Okay, I want you to follow this. That's the support. That's the resistance. That's a support. That's a support. Oh my God, became a support again. Remember that? That's the race that Biden and Trump was running, right here, presidential election week. That was right there. And then with the recent pullback, that 66% correction that we just saw, remember, in early October, right there. So we got we're talking primary moving average. This guy right here, this moving average, definitely has a very impressive resume, right? That's what we said. And you can see, so you can see, despite the fact that the market has seen its up and down shenanigans every single day or maybe every single week this entire year and last year after COVID shenanigan, it's faithfully cultivated and established an uptrend. And it continually and faithfully executed that uptrend. Because what happened? We just made a higher high. How high can it go? I don't know. Do you know? Well, you don't know. I don't know. And that's the wrong question that you're asking. How high can it go? We're at the top. Well, nobody knows. Unless you're God, you cannot see the future. I don't know. Right? More money has been lost by investors preparing for corrections than corrections themselves. And so many people not only lost money trying to short it, but the opportunity cost you have to account for it as well. Because if you're not riding this move this year, even part of last year, there's an opportunity cost at risk. So you're missing out on a move. And market is going to make sure, market is going to make it not easy for people to get back in. And that's the point. So looking at this long term, I think we're gonna finish the year strong. Keep in mind, S&P 500 is up 25% year to date. Nasdaq almost 30%. Semiconductors like 40-some%, right? And there might be a little bit of shenanigan here in the short term, which we'll be, you know what I'm saying? We'll be analyzing it every single day next week. But currently we are holding my short-term moving average on the daily chart right here. As you can see, it's not a coincidence. It is not a random occurrence, right? It is not a mistake that these levels continue, not only in the long term, but also in the short term. So if we lose this level, there could be some shenanigan. Market might want to come back down to retest that, this level or something like that. My midterm moving average currently residing in here, but I'm kind of getting ahead of myself because things can, this can definitely break out next week, and we don't know that, and we're going to have to analyze it on a 65-minute chart. But if I had to guess, I think there might be some fluctuations going into remainder of November and first part of December, and maybe the second part of December, we might see that potentially a good rally to finish the year strong. And that rally could continue until maybe first quarter of January or first quarter of 2022, right? And I think that's kind of what I'm forecasting right now. And obviously we'll have to take it day by day, and the market is going to kind of give you piece of information each day, but it moves so slow. It moves so slow each day that if you're just only looking at the short-term price action, there's no way you're going to able to forecast the big picture. If you understand the big picture, there will be no worries, man. There will be no anxieties, man. You won't be desperate or needy, right? And that's the point. You want to be part of this big rally. Yes, it's difficult to go, like if you haven't been long at all and go full-blown long here on S&P, that's difficult. But there are other sectors. There are other stocks that are still in value today, which you could accumulate, and hopefully some of those laggers can get back in. Keep in mind, those COVID stocks, we're talking Peloton, we're talking Zoom, we're talking Spotify, and even Amazon and Netflix hasn't moved anywhere this entire year, though Amazon and Netflix is recently making a move, but this entire year they've been moving sideways after a big COVID move. So a lot of these hyped up COVID stocks, they are crashing down this year. But stocks that were lagged last year, they're making a huge move this year, right? For instance, Google up 70% this year, when last year it was lagging compared to Amazon, Netflix, and other hyper COVID stocks. American Express, it was lagging heavily last year. A lot of bank stocks lagging heavily last year. While all these COVID hyper stocks made a huge move. Well, they made a big move this year. So what I'm saying is, yes, S&P, the indices up so much. How can I, or how can you full blown long here? You gotta know which sectors to look at. You gotta know which stocks are at value. Obviously, you don't want to chase Google after 70% run this year. No. But there will be stocks that you can concentrate and still build your portfolio. Let's go to Nasdaq here. Keep in mind, today's like a first weekly video, weekly update. So I'm just kind of like putting it all together. Kind of, you know what I'm saying? Kind of, you know, so you guys can be all on the same page with my long-term outlook and what had happened last year, this year, right? As we do these on a weekly basis and on Fridays, it will be much shorter. I'll put it around like 15 minutes, under 20 minutes. But today, I just spent 20 minutes just talking about Spider because I'm just recapping everything, right? Nasdaq. So if I zoom out and say, this is why it's important. Look at this level right here. This is not a coincidence. Right? This is not a mistake. This is not a random occurrence. That prior resistance continues. But that's coinciding with the rising option support, right? Market initially breaks out. Oops, that's my crayon there. I don't know why it moved, but market initially breaks out, comes back down, retests that level, and goes right back up. Why there though? Right? And that's the level. That's the level. That's the level that market decided we're going to find support. And despite the fact that we did see this correction right here, that pullback, and we bounced back up, you can see that how the market faithfully cultivated higher lows. What's the definition of an uptrend? Higher lows and higher highs. I'm sure your 8-year-old daughter can able to identify this as higher lows, right? If we can identify higher lows and higher highs, then we know that we want to give benefit of the doubt to the buyers. And should there be any corrections or pullback, and those are levels usually markets coming down to cultivate that higher low, because the market doesn't go straight up. But I think that the big thing about this Nasdaq is this right here, that, believe it or not, that's COVID. Some of you thinking like, what is that? Is it like a 6% correction or something? Okay, that's COVID. That's 35% correction, right? That's COVID. And people thought this market was up to it. Believe it or not, I will start accumulating my index fund around March lows in April, which I did on Nasdaq here. And I added more right here. Right here. Right when it like hit all-time high. And then like it pulled back just for a couple days. And same amount that I got in at like on my first entry, which was like, around like, late March, early April, something like that. And most people look at that as like, are you freaking crazy? Okay, we just made this V-shaped reversal back up to the all-time high level. This thing is going to crash right back down. That's what everybody was saying. There was a lot of fear there. There's a reason why I got into it right here. Good entry point is relative. It's depending on how you see it. A lot of people will give up and say, you know what? No, I missed my entry here. I ain't going long here, okay? No way. I ain't going long there. There's no way I'm going to go long in that vicinity. People be like, okay, I missed out my light low, so I'm just going to wait, right? I'm just going to wait until we see a bigger correction. If you did that, which Nasdaq Qs were trading at 220s, now it's trading at 404, which I'm holding all of it. Haven't closed out a single share of my Nasdaq index fund. And I think the biggest part of it was for me is that I felt as though, psychologically speaking, I know we're an uptrend. I know we just did a V-shaped reversal, and so many people are not happy. You would think most market participants were not happy that Nasdaq did this. I think the reason behind that is because they're missing out. Because remember, market always fools the majority, right? The majority of retail traders missed out this move, and they wanted some big correction. That way, they can maybe get in. Market knows that, and market want to make sure that you cannot get back in. So I felt as though if I didn't add here, then I might miss out a big move. But at the same time, I was willing to go through any kind of drawdown. And that was the plan. But fortunately, we made a big move here initially, pulled back and added more here, and then we got up. So what I'm trying to get at is, people thought that market was up too much, here. People thought the market was up too much here. People thought there's no way market cannot go any higher. People thought this is it. People thought that's the top. People thought that's the top. You know what I'm saying? It never ends. Nasdaq is currently doing the unthinkable. Who would ever thought that Nasdaq can do this? Q's trading at 160s, now trading at 400s. The trend is assumed to be in effect until it gives us a clear signal that it has been reversed. And nobody knows what that means, right? Nobody knows what that means. So then why is everybody just trying to call top that he cannot possibly? Remember, something I always like to say is laws of physics, right, do not apply here, right? It's up too much, you shouldn't do that, that didn't happen. It's up too much, you shouldn't do that, that didn't happen. It should be up, didn't happen, didn't happen, didn't happen. Didn't happen, that didn't happen, that didn't happen, that didn't happen. And how long more though? How long more can it happen? I don't know. I just want to continue to give benefit of the doubt to the buyers. Like I said, if you missed out this entire rally on the Nasdaq, yes, it is extremely difficult. It is extremely difficult to go full-blown bullish up here. I get that. It's difficult. But there are laggers. There are still value stocks you can open. Because keep in mind, market can correct through time. Do you know this? Do you know the bet? You know what? I'm going to add Russell 2000 just because Russell 2000 is a perfect example of market correcting through time. Right here. You see how Russell 2000 makes a huge move, right? From 100 to 230s, like that. Just crazy up move, right? And then what does it do this entire year? Keep in mind, Russell 2000, you think because it moved sideways all year long, it didn't do anything? 20% year to date. Well, it did this sideways all year long. But this is what I call correcting through time. So let's say you got in your index fund on these, you bought this, let's say you bought it here, here, and here, and you're holding. You feel as though this market is up too much, right? What does the market do? Instead of Russell 2000 correcting through price, maybe doing something like this, it does this, sideways. So you think S&P or Nasdaq can do something like this maybe next year? Just correct through time, move sideways the entire year. Yes, it's totally possible. During that year, some stocks will continue to make a move, some stocks move sideways, and some stocks will tank. And you will still have opportunity to figure out which stocks are in a rotation for next up move. And the key to figuring that out is never ever chase a stock that's already up moved too much. Because a lot of you probably already learned that lesson. If you chase those COVID stocks last year, those hyper COVID stocks, if you chase them, well, they're all crashing down this year. At least 40, 50%, minimum 30 this year. So what I'm saying is, yes, it's difficult. It's difficult to go long. on Spider up here. Same with the Nasdaq, making new all-time high today. Difficult, yes. What I'm saying is, instead of trying to say, you know what, it's up so much, man, this thing's gonna crash back down. Instead of saying that, because that's stupid, right? Stupid people don't make money. Instead of saying that, you know what, the market is up, and there's a possibility market could correct through price, like it did like a Russell 2000. Or maybe there's a possibility that at the same time, Spider might come down 15%. Either way, it should be a good thing for you. If you can balance your portfolio in that way, you tell yourself, okay, I'm gonna get into some positions, but then if we just move sideways next year, okay, there will be some other values I can get into. Let's say we get into 15-20% correction next year. Let's say if we do, whole lot of stocks will be on sale at that time. And even you might even get into some, index funds at that time. So it should be, as you approach this market, you should never be a desperate situation where market must go up for me, man. Market must do this for me. If not, I'm dead. Well, you're already in a danger zone, my friend, because if you're in that state, well, sooner or later, the market will bully you around, hassle you around, chew you up like into million pieces, and throw you out like you're nothing but a dirt. And you know what I'm talking about. So how you have to approach this market is, it has to be okay either way. So for me, right? For me, if this market keeps on going higher from here, let's go to 520 or something like that early next year, right? Because I have many longs I'm currently holding. If this market does something like this, like a Russell 2000, where it moves in sideways the entire next year, great. That's the best thing you can ask for as a long-term investor, because I'm long since the lows, been adding on the pullbacks. So I want to keep those gains. So sideways is totally fine. But another scenario that, the worst case scenario that S&P decided is going to see a maybe 15-20% corrections, right? That's also great, because if we do see something like that, not only I can gap, because I haven't been adding in my index funds for, I don't know, since like especially for something Spider, since like somewhere at these levels. Not only I can possibly get into Spider, maybe I can even look for getting into exotics. We're talking maybe some call options. I haven't been trading options last several months, right? I actually did get into some like triple shares and double shares in that vicinity when we, when we retest that and I'm still holding those, that pivot. I just wasn't feeling really good about calls, just because, I hate losing money with calls. It's much more riskier than the triple shares and double shares. So I actually got into triple shares and double shares on these indices, in which they're doing, they're doing pretty good because of that move. But let's say we see up move towards the end of the year, next year we see like 15-20% correction or something like that. Well, I think at the time, then there will be a lot of setups available for me to even get into some call options. But out of those three scenarios, two scenarios, right, that I told you about, this market keep going higher like this, or sideways, or worst case scenario, coming down. So two scenarios are bullish scenarios, right? Think about it. So if you think about it, 70% or, 67% or whatever, right, of chance that the market is going to be in a bullish scenario. Because moving sideways is still bullish scenarios, consolidating. But you have about 33.3% or something like that, this market actually seeing a steep correction next year. And that, when I say steep, I mean, I don't believe we're going to see like 35%, anything like that. No. 15, 10, 12, 15, the worst case, minimum 20, but around 15, right? If we see something like that, then, if I can forecast that, I can try to get out of some of my longs, but I'm going to still hold through. And then when you see a pullback, I can able to accumulate, because a lot of stocks will be on sale at the time. There will be a lot of, the liquidity in the market, it will be, with especially in the options market, right? And so it will be more favorable to get into some options trading and stuff like that. So you see, either way, and it will be okay. But after, even with all of that, we want to give benefit of the doubt to the buyers, understand a big picture, because I don't know how long this will continue, but trend is assumed to be in effect until it gives us a clear signal that it has been reversed, and we have no signal at this. So let's go to gold here real quick. I spent way longer than I've anticipated on these, market indices. But gold, we got some good signals. I mean, when I look at my weekly chart, monthly chart, long-term chart, good signal. However, right now, this is a level that bulls need to reclaim to the upside. This is very strong resistance, right? This is life. There's always, you trying to come up, and things are hard, right? Gold trying to come up, things are difficult. It's not easy. It's not supposed to be easy. It's meant to be hard. And right now, gold is really struggling on this resistance. What it needs to is better. Best case scenario is just gapping up or just thrusting above it. And what it needs to do is go up here, and then it needs to do that, and then do this, and come down, and then start to make higher. We got the low, we got the low right here, higher low, high, higher. If we see something like that, gold is ready. Gold is right now, it's hard. Life is hard. And it's been hard this entire year. You can see -2%. This hasn't done anything this entire year. We still got this lower high, that resistance. That's the level that it needs to get above. Let's go to Bitcoin. I'll end the video with this, and I promise next Friday video, you won't be as long as this one today. I'm just trying to recap everything, get you guys up to date. Anyway, so Bitcoin right here, you see this guy? This guy is the guy. This gap right here, that's the gap that made Bitcoin tank 50%, 50%, right? Last time S&P 500 saw 50% correction? That was 2008 financial crisis, my friend. Grayscale Bitcoin, it did that just a couple of months ago in just span a few months. But that's what Bitcoin does. It crashes 50, 70, 80, 90%. It goes back up 100, 300%. So you don't understand what kind of asset class you're trading. And Porsche, you know what I'm saying? Position it correctly so don't get hit. Anyway, so this that gap right here, that gap that killed it for 50% correction. There's some presence there. Not able to feel that come right back. We gap down. So you see that gap needs this. Okay, first of all, if you're a bull here, this gap must be filled. And this right there, you don't feel this gap. You don't feel this gap, like things can get hectic. I'm not gonna say like it's gonna crash back down, but hectic. You know what I mean by when I say hectic? Right now, we see that resistance. So you see the rising pivot. I draw these levels all the freaking time, and that's the pivot, and that's what we're holding last couple days. We need to hold that. If we lose that, however, 42.25, 40.11, the gap area might hold. And then, you know what I'm saying? We might get like support. You can draw maybe this support right there. Then we might go there. And that's a level coinciding with the gap area. So if we do lose this rising pivot, right? If we lose rising pivot, it'll come to about 40 or so in Grayscale Bitcoin. There you have it. And starting next week, though, it will be shorter. It will be under 20 minutes. But my Traders Club membership enrollment will be opening in 5 days. That means that's what day is that? That's going to be next Wednesday, 24th of November. I will be opening up my membership for Traders Club. And so Wednesday, the 24th, I will have my membership enrollment open. If you're interested, and I'll explain more. I already spent so much in this video today. I'll explain more on the 24th after the daily update video. I'll explain the membership tiers and the levels and what I offer and stuff like that. But pretty much, what you witness in this video, that's just a little preview of what, a lot of these long-term, secular and macro. And that's a lot of people ask me about that. They're like, okay, like, you know, you do 65-minute chart analysis, you know, like, you know, I like to know the big picture, the macro analysis. Well, that's what I do. That's one of the main things that I do, you know, for my members. At the same time, you know, you would have all the access of, you know, trades that I'm getting into right now, you know, which stocks that I'm going to be buying, why, how much I'm going to get into it, and stuff like that. So I will explain more Wednesday on the daily update video, and then that's the day that membership enrollment will open, and we'll go from there. You guys enjoy the rest of this weekend. Good luck trading next week.